Good afternoon, traders, and welcome to this week's weekly market analysis class, Monday the 14th of May. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's bring forward what we have on our agenda this week, and let's have a little bit of a chat about the markets. As you know, the daily call was away Thursday, Friday last week while I was away, so I didn't really get a chance to look at anything. What we have installed this week is what I'm showing you on my screen right now, and a couple of key things to look at and things to notice. Let's kick off with our own Aussie dollar. We have our monetary policy meeting minutes, which occurred tomorrow, and what we're looking for here is we're just particularly paying attention to the nature of the tone of those minutes. Are they more on the dovish side or more on the hawkish side? Aussie dollar has been falling for quite some time. It's made a little bit of a pullback right now, and if that pullback continues or whether we resume that downtrend will largely depend on these minutes and the nature of specifically the aggression or the dovishness of the tone. Of course, also for the Aussie dollar, later in the week we have on Thursday the employment numbers. Employment numbers are quite important, so let's see what they present for us, and possibly as a combination of the both we could get the clearer picture of where our Aussie dollar continues to drop, or will it make a little bit of a pullback and gain against the US dollar specifically. If we turn our attention now to the US dollar, the US dollar has been on a great run in the last 2 weeks. It's been going pretty much having its way against all the other major currencies. And now at the moment there's a little bit of I think excitement. They're announcing Donald Trump's meeting with a North Korean leader, and this could have impact from a geopolitical point of view. Of course, there's also the Iran treaty, which Mr. Trump has basically stated that he wants to pull out of. So there's a lot of things on the geopolitical front that is affecting the US dollar, but the main one is that from the last FOMC meetings, it seems that they are on track to possibly give us another interest rate rise. So this week from the US, we have core retail sales numbers here. That happens tomorrow evening, and that's pretty much we got the building permits as well, which is an indicator as to how their economy is going. Are there more buildings being applications being submitted? And the only other one that I thought I saw oil somewhere, oil over here. This one possibly affects the Canadian dollar more than anything else. Okay, so there you have it. That's our US dollar for the week. Moving our attention to the pound, and the pound has been basically falling for a good solid 2 to 3 weeks. It seems to perhaps has found a little bit of support. Mr. Carney did come out towards the end of last week and say, try to reassure everybody that the first quarter, which was, let's face it, not good for the UK. He did try to say that first quarter figures was a temporary performance or measure in the market, and that things are on track, and that there is a chance of that interest rate to rise later in the year. I think at the moment the rate futures have priced in about a 90% chance of an interest rate rise for the sterling, but that's in November later this year. So they did try to recover, and from all the turmoil that's been happening in the UK this week, we have the average earnings, which are over here, and the inflation report hearings. They're the major pieces of news coming out of the UK, and that happens tomorrow afternoon. Finally, the one that may give us a little bit of movement in the market is from Canada, and it's the CPI numbers down at the end of the week, and that pretty much wraps up the major data releases that we have this week. In terms of what's been released, I think the one that's going to be impacted the most, the currency pair that will get the biggest impact, will probably be the Aussie US dollar. Due to the nature of the data being released this week and the combination of the both. As always, those times that I'm showing you here are in my local time, which is Australian Eastern Standard Daylight Savings Time. So please take note of those times. If you are trading any of these particular currencies during those moments, just be aware that it is a time where the market can have higher volatility. Okay, all right, let me bring my charts forward. If anybody has any questions, please type them in. If you've collected any questions throughout the week, copy and paste. As I see them, I will address them. And let us kick off, and let's start off with our Aussie dollar. Okay, as I said, Aussie dollar has been falling. There was a little trade opportunity over here. It's a little inside candle right there. When did this happen? This is Friday, Thursday, Wednesday, Tuesday. So did we trade this last week, last Monday? Can anybody remind me? Did I mention this one at all? I'm pretty sure that I did. I just don't remember triggering, or I don't know why. If you did trade that particular inside candle, you would have triggered there. Your stop would have been there, and you've basically hit T1. So T1 would have been hit on that particular trade. Of course, the trade that I'm talking about is that one there, that inside candle there, and the trade is in this direction. Now, at the moment, we have pulled back. Let me just zoom out again. At first glance, if I was to get a setup there, it looks like a really sweet hit on that trade. But what I'm concerned about is that we've made a higher high. So we're about the same level as that high. Let's see. We could possibly get an inside candle out of these two candles there and have an opportunity to take it in this direction. And we'll only know that tomorrow when this current candle finishes. If the current candle breaks and goes a bit higher and pushes to here somewhere, and then we get the inside candle there, like out of those two, then that would also be an opportunity as well. Things that I want you to take note of is this level. I'm just going to draw a line. Okay, I don't want to go beyond that line, so I'm looking for that candle pattern to occur anywhere between where we are right now and that line to hit it in this direction as such. Okay, if I was to go beyond that line, then I really don't like it. Okay, and the type of trade that this would fall under is a continuation of a downtrend type trade. Okay, so everybody clear on that particular situation? Just note that that's for the Aussie dollar. Just questions just popped up. Just give me a moment. Let me read it. Okay, question marks. A question being asked regarding interest rates. If interest rates are going up or down, does it make an impact on the currencies? Interest rate going up generally gives strength to the currency. Okay, so for example, if the Aussie dollar, if the RBA was to increase our interest rates, generally that will give the Aussie dollar more strength. Okay, but you also got to remember that it's relative to the other currency that you're comparing it with. If you're looking at Aussie US, it's the relationship or the comparison between the Aussie currency compared to the US currency. So on the assumption that the US currency remained neutral, okay, so it didn't get any positive or negative news, and all we got was interest rate increase for the Aussie side of the pair, which is positive, well then we could expect that pair to go up. Okay, sometimes you do get an interest rate increase and you see that it does not go up, and often it's because the market has already factored. It was so obvious that an interest rate was coming that the market's already factored that into the equation, and then the net effect is that it doesn't, when it's announced, it doesn't have much more legs to give, if that makes sense. All right, so that's a little bit on interest rates, but generally an increase in interest rate is good for that currency. A decrease in the interest rate is bad for that currency. That's the generic rule, but I always remember that it is a comparison, so you need to see what's happening to the other currency that's being compared with. Is that receiving positive or negative news as well? And that may amplify or diminish the effect of a rate rise. Okay, all right, so our Aussie dollar, we've just established that we were looking for the pullback. I've just drawn that line there, so I don't really want to go beyond that if I'm still looking for a sell. All right, let's look at the Euro USD. Look at this one, guys. I've left my lines on my chart, and it's developed into a classic breakout trade. And usually that distance there is what you can expect as your target, and you can see that this has in fact played out really, really nicely and has delivered such a pattern. Okay, what we can do now for this one's pretty straightforward. I would like to see from now, I guess from where I am right now, I'm looking for the price action, an inside candle, an engulfing candle, something like that, to be able to get the opportunity to hit the trade on the down as I'm showing you right there. So this one's ready, set to go. All I need is basically the right candle pattern and I can hit it. Again, if this continues to go up a little bit too high, well then we may have to pause. But if it happens anywhere in about that region there, I'm pretty happy with it, and I would be more than willing to take the probability on such a setup. Okay, so I've just marked it in just as loosely, and I'm looking at this graphically, where I expect or where I would be happy to see the correct candle patterns. Okay, the two candles that we're on right now, let me just zoom in on them. The high of today is 1968. Okay, right now we are a chance of producing an inside candle right now. These two candles here, so far it is an inside candle. Okay, so if it was to finish exactly as it is right now, well then tomorrow at the break of the down one there, we could hit that trade straight away. All right, we still need to wait for today's candle to finish, but as it currently stands, it is an inside candle. So just flag this and mark it in your watch list, because we could get an opportunity on the Euro USD tomorrow morning. Let's have a look at the US yen. Okay, so the US yen. US dollar's been going up, it's pulled back. We didn't really get an opportunity there to hit that trade in that direction, and it's a little bit of a stale now. Let me just change time frames. I just want to see. Yeah, look, I'm getting a little bit of a, I've dropped into a 4-hour chart and I'm just getting into a little bit of consolidation. The market's just sitting in here a little bit before it makes its mind up whether it's going to continue or whether it's going to fall back. So the way that I see this, let me just move back into my daily. I'd like to see the price leave that gray area before I look for my next trade on the US yen. All right, so we never got a setup down here where I'm pointing right now. So let's now, it's tried to break, it's come back, and it looks like it's consolidating in that region between, what is it, the one, roughly 109 and 110. So it's consolidating in that region there. Let's wait till it leaves, and then we can look for a trading opportunity on that one. Rav, are you referring to the US yen? Okay, let me see. Is this what you're looking at, Rav? Okay, alright, so let me just adjust. So one of our fellow traders has just alerted me to a channel. Let me just make some adjustments, see how much I can fit of it. I'm trying to fit it in as best as I can. Okay, so US yen, one touch, two touches up top, or one and two down the bottom. So if we were to get something happening at that level, which is roughly, it'll be around about the 111.50, and we got the price action set up there, that would be a valid trade, and I would be happy to pull the trigger on that pretty much all day long. So yes, point is taken. We do have a channel. That still doesn't change the fact that right now we're inside that little congestion that I've drawn, and until I move out of it, I'm not going to look for any other trade. Now that I can see this channel, hopefully it moves up through, hits us over there, and then gives us the opportunity to take the trade down. Okay, thank you for that, Rav. And that wraps up our US yen. Let's have a look at the US CAD. Another channel. This is one that we have been following now for maybe, I think, about 2 or 3 weeks. I think we spotted it. We're still smack in the middle, and we're not getting opportunities on this one. Look, I'm right flush in the middle of that channel, so I'm just going to leave it alone. I'm just going to wait for the trade to come and meet us. So I'm not going to chase the market. I either want it to come down to here so that I can do this, or I want it to go up there so I can do this. One or the other, I don't mind, but where we are right now, I'm not interested at all in any trade on the US CAD. Let's have a look at the GBP USD. Okay, GBP USD, the cable has been coming down, as I mentioned. It's coming down, and it seems now, look at the long, let me zoom in a little bit so we can all see it a bit better. Look at the long tails on these candles. Essentially what this is telling me, in that area there, the market is just very undecisive. If I was to zoom in, let's go to a 4-hour chart, you can see it. If you go into a 1-hour chart, you can see the market goes up, down, up and down. So back into my daily, it's undecisive. We don't know. We found the floor? Maybe, maybe not. I did look at this region here. It's gone a little bit lower than what I would normally like it. An area that previously acted as resistance, a little bit of here, and now we're there again. I'm not willing to take a trade on this. I don't have a good enough level for this particular one. Let me zoom out a little bit more, see if I can see anything extra. Now look, I don't really see anything additional to what I've just said on this particular pair. So what I need to wait, ideally, the ideal trade is that this will come back, test this bottom line there, and then give us the opportunity to trade the continuation of what we feel could be a downtrend. Okay, that's the best probability that I can see on this one. We're not there yet, so we've got to wait and see if it develops. So I'll leave my lines on there, and I will know what I'm looking for when I next look at this chart. Kiwi Dollar. Okay, let's have a look at the Kiwi Dollar. Okay, we're kind of like in free fall at the moment. There's no area where I can feel that there's a possible turnaround. So what I've got to do is I've got to wait for it to turn around. I think last week we may have seen this candle here. It possibly didn't look crash up for us. Did anybody trade it? If you did trade it, you would have hit your targets. Did anybody trade that little inside candle there? Let me zoom in on it so that everyone can see it better. It's this candle right here. Those two there. I think, let me just count back. That's Friday, Thursday, Wednesday, Tuesday, Monday. So last Monday, we would have been talking about this candle, wait for it to complete, or we may have felt that it wasn't a big enough pullback. Nevertheless, I did not call it out, so I didn't trade it, but I was just curious to see if anybody else did. So again, our game plan for the Kiwi dollar will remain the same. What we're looking for is, let's wait for it to hit some kind of a bottom, let it pull back, let it give us the price action, and then try and hit it on the continuation. It seems to be the common theme. It's only because the US dollar has bossed the market around so much in the last 2 weeks that it's created these big one-directional moves, as most of the majors that we look at are compared to the US dollar, or they contain the US dollar in the pair that we're looking at, should I say. Alright, so that's it. That's for our Kiwi. Let's have a look at oil. Okay, this is an interesting one. Remember last week I drew this line here and I said it's only temporary because I don't know what's going to happen. And we can see that the market's gone up. So what I can do is I can adjust my line up there. But again, if I leave it here, that doesn't mean that this is where the line belongs right now, because it could continue to go higher. Now, if I wanted to be really aggressive, okay, the best thing that I could do is let me just get rid of both of them and draw them in again as parallel lines. So obviously I have to lock in my bottom one because my bottom is the one that I can lock in, where I've got the 1, 2, and 3 touches. Now what I would do is I lock in the first touch over here, that one there, and now let's first of all focus on the bottom line. The bottom line's got 1, 2, and 3. So that is a line. There's no question about it. I can lock it in. Now, because I'm running parallel lines, I've locked in one touch over there. So I could assume, okay, now it is a higher, a more aggressive trade, a lower probability. If I was to get price, if this was to go there and I was to get price action at that point and I took this trade, this is the type of trade that, look, personally, I don't mind taking it. It is aggressive though, okay? But I can only do it when these two lines are parallel to each other, because if it was a wedge, then the probability that it turns around at that point is not the same. Does that make sense to everybody? Does everybody understand what I'm trying to explain here? So the only reason that I would take this, which is what I call an aggressive trade, is because these two lines are parallel to each other. Okay, so I can see quite a few new names in the class. If you are new, when I call out and if I have a question and you don't quite understand it, just type in a question mark. I don't like to leave anybody behind. I just want everybody to, if they possibly can, to grasp what I'm trying to explain, because when we draw these lines on our own, that's when we make the errors, and that's what I don't want to happen. So like again, if I drew this line in there, that dark one, and I was to take a trade off there, price action there, well then who's to say that that really is a line? Because I've only really got 1 point, and it's not a line until I've got 2 turning points on it. And this so far is not a turning point. Until it goes down, only then I can say it's a line. Okay, so but with a parallel line, I'm depending on the bottom one. Oh, just accidentally deleted it. Depending on, I've locked in the angle of the line with the bottom line. So therefore, when I lock in the first point, I can kind of use this method as a predictive method of where I think it may turn around. And when I couple that up with price action, it gives me a better probability, but it's still an aggressive trade. So there you go. On oil, I'm going to leave it like that. And if I do get to that line, I'm happy to take that. So I will leave those markings on my charts. Okay, what have we got next? We got gold. Let's have a look at gold. Okay, gold has threatened to break down with this little candle, but then it's tried a couple of times again, and then it's pushing up. Tricky, this one. If I was to get price action right here, for example, okay, I believe this would be an aggressive trade to attempt to trade this way, because I don't believe we're in trend until we clear this level. Okay, so for example, if you look at it, you go down, go up. If we were to break this level here, then when we pull up and now we get the price action there, that is a much higher probability to trade there. If we do it over here, you could get it, okay, but the probability is definitely lower because we haven't really broken out of this whole area yet, and we can't really say that we are in trend until we actually do that. Okay, Dennis, I'll explain that question as soon as I finish the last two markets. Okay, all right, so gold, it's in a really tricky spot. I'm not going to do anything on gold, even though like I feel like I want to sell off that level. I'm not. Okay, it would be breaking my rules. It's not exactly the setup that I'm looking for. All right, let's have a look at the last one, and I've got the ASX 200, and self-explanatory here. Let me just zoom out so everybody can see it. Market's coming from underneath, it's gone to a level there, and it's going to a level there. This is what we call a double top. We are nearly there, nearly there. I just wanted to get up a little bit more. I just want one candle to touch into this line and not exceed it by too much. So for example, if today's candle did this, tomorrow's candle did this, that's exactly what I would love, and then I would be happy to take that on the following candle. Okay, makes sense to everybody, that one? ASX 200. Alright, great. Okay, so let me recap. If you have any questions, please type them in or paste them in. Any questions that you've collected over the week, I'll just recap quickly and I'll come back and answer a few questions that are floating around. Aussie US dollar. We could possibly get a trade tomorrow if it remains as an inside candle the way that it looks at right now. If it continues to push back up, as long as it doesn't go beyond that line and we get the candle combination that we want, then I'm happy to go ahead with that as well. Euro USD, similar story. We want, I think we've just broken the high. I think we're going to break that high, so it's probably going to, if it does happen, it's probably going to be about there somewhere, and then we're looking for the trade as such. US yen is one that we said we've identified a channel. We are in this congested zone, so let's wait for the market to move out of that zone and see if we can possibly get a trade on there. US CAD, we're in a channel, really nice one, but we're right in the middle of it, so we're not doing anything until we move to the edges. GBP USD, we are looking to see if we found or are we finding support, but it does look like if it does and it pulls back into this area here, this would be a really good probability trade. So the probability is in our favor if we should see something like that. And notice the difference here is that we have taken out the lows, so we can assume that we are into the trend. Kiwi Dollar, we're going to sit this one out at the moment. We don't have a floor. The only thing that we can do, if it does pull back, then we can look for that common theme today, which is continuation of the trend. WTI, we've set up a channel, and we think that if the market does come and greet us at that point there, this would be an aggressive attempt of a trade for us in this direction. So those of you who don't trade oil or don't do the aggressive first trade off the channel, well then just sit this one out. Gold, we're leaving alone this week, and the ASX, we are very, very, very close to having a double top. We just want to see the correct candle formation and a little bit higher, touching the blue line, where we're happy to have a go at that one. Okay. Alright, so there you have it. That is the analysis for this week. Let me answer some of these questions. Let me find a good example and I'll answer a question on a turning point on a line. Give me 1 second. Okay. Just give me one moment. I just want to find a good example so that I can answer the question. Okay, here's a good example. Let's say if I drew a line like that. Okay, now there's quite a few new people in the room, so I need everybody to answer this question, because you're not going to learn anything out of it if you don't commit to your answer. Okay, Y for yes and for no. If you don't know the answer, just type in a question mark. Is this a valid line? Yes or no? Or if you don't know, just type in question mark. Can everybody please answer for me? Okay, so Harm, Mark, Paul, correct. Dennis, correct. David, yes, correct. Come on, guys, let's commit to an answer. If you don't know, just type in question mark. Okay. I've got about 80% of you saying no, 20% of you saying yes. The answer is no. Now, why is it no? And the reason is because for it to be a line, okay, you need 2 turning points on that line. Okay, what's a turning point? Market goes up, meets it, turns around. That's 1 turning point. So that's 1 valid point. But over here, is that a turning point? Yes or no? Is this one here a turning point? Yes or no? At the moment, the way it is, so far, we don't know. The answer is we don't know if it's a turning point, okay? So if it's not a turning point, we cannot lock in this line, because if this market kept on going, gives me another candle like this, let's say, and did just say produced a couple more candles like this, then basically the candles came down, just say like this. Then you look at your line and you're going, oh, well, why did I have my line over here? This doesn't make sense. The line should have been like that and then readjusted as such. And now, if I drew it like that, then I can say here, yes, definitely 1 turning point. Here, yes, another turning point. So tick, tick, that is what we call a line. All right. Does that answer the question to the person that asked me about turning points? We need 2 turning points to confirm or to lock in a line. All right. So there you have it. Okay. Any other questions? Oh, okay. The question's been asked right now. How far does it have to turn before we can say yes, it's a turning point or not. Okay. All right. This part is gonna. The more you look at charts and the longer you do this, you just get a feel for it. Okay. I wanted to move away a little bit. Okay. You will get a feel for it. Let me just look for something to test us. Give me 1 second. I'm just gonna go through some charts just to have a bit of a. Okay, let's look at this one. We can see it's moved away a little bit there. All right. So if I was to draw a line like that, typically if I was to draw a line like this, I typically would not trade this. Even if I had what I was looking for there, I would not trade it. Okay, so normally what I try to do when it's only moved away a little bit like that is I like to extend the line and catch another point. So now if I catch 1 point there, 2 points, then this is third point, then this is yes, I would be happy to trade that way. Okay, so you're going to find you just have to adjust and get used to it. Okay, but I don't know, like if I look at the chart, I'd like it to go about this distance. I'm not counting it in pips, I'm just telling you graphically. Well, like I would say this one here would be okay, so it just pulled back a little bit and it was kind of okay. All right, if you're in doubt, send me a screenshot and I'll tell you what I think. All right, another question. What would be an appropriate stop on the Euro USD that is setting up at the moment? Okay, let's have a look at it. Give me 1 second. Let me change that chart back. Euro USD. Okay. Mark, the best answer to that question is go into the CSC members area, look at the price action videos, and it will tell you exactly how to set the stop up. But let's say, well, actually we've just gone higher, so it's not set up now, but let's pretend, let me just draw it. Let's say today's candle ends up like this, tomorrow's candle ends up like this. The trigger will be the break of the low, so this is the entry. The stop, let's give this a little bit of a wick. The stop, if I'm working with a daily candle, okay, which I am, the stop, I like to put it anywhere between 5 to 10 pips above the high of this candle here, which will have the fractal. Okay, so that will be my stop distance as such. Does that make sense, Mark? Any other questions, guys? Go watch the video, the price action videos. They're very much in detail, and you'll get a really good feel for it. Okay, so the stop distances will always be different depending on the size of the candles, but the principle is always the same. Okay, any other questions, guys? We're gonna wrap up. Where do you watch these videos? Meredith, I'll send you an email, and here, I'll show you where. Give me 1 second. It's got to open up a web browser. So if you go to csctraders.com.au, and then you go into the members area and log in. Once I log in, sorry, I've just gone into the administrator section, but once I log in, essentially on the front page is where you have the daily call every day and the weekly class. So this class that I'm doing right now, in about 40 minutes, when I finish, the recording will be up here for you to go back and review. Okay, it's on the front page as you log in, and the strategies, I think it's strategy 4 and 5. No, not that one. It's 5. Here we go. So it's strategy 5 and 6, I think. 5, 6, and 7. This is price action in trend trading. This is price action in counter trend situations, and the videos are here. Okay, so if I just press play, basically the video will start. Okay, so they're all there. If you don't have access to this, send me an email, and I will make sure that you do have access. Okay, Meredith, you should do, but if you don't, send me an email, and I'll make sure that you do. Okay, so and then just remember just csctraders.com.au, and then go into the members area, and basically in there it's the complete program is in there for you to go back and review and have a look at as well. Okay, any other questions before we wrap up? No? Alright, well, let's call it a day. Hope you'll have a great trading week. Make sure you keep watching the daily call every morning. If you do have any questions, send us your screenshots with your question, and let me see if I can assist you. And otherwise, I will speak to you all next Monday or on the daily call tomorrow. All right. Have a great week, guys. Speak to you soon. Bye for now.